Hi there, welcome to Kneppy Invest and welcome to March 21, 2025, the final trading day of the week. We did get our expected bounce. How long this bounce lasts, don't know. If I remember correctly, during the GFC, we had one bounce that lasted about 2 or 3 months. So maybe this is going to happen again. In fact, sometimes you see a bounce go almost to a new high and then you start to see a lot of weakness. Many ways this could play out. And all we know is we've had a good week, up about 2%. I think the HO is. Today's been interesting. I've just noticed that the ASX 200 is up 0.18%. It was up about 0.5% not that long ago. So we have seen a little bit of selling coming in during the day. Not the best day for tech, down 0.72%, which is not surprising because NASDAQ was down 0.3%. I thought it was down a little bit more than that. They must have had a good end of the trading day. Russell 2000 down 0.65%, so small cap, surprised that is up. Anyway, and just by looking at the start of the day, all the indices were down on open, and then they rallied, and now they're pulling back again. So interesting day on the market. The agenda for today's video will go through the best and worst performing sectors, indices, and also companies. I do have a top 5 stocks of the day, although coming in number 1 is not really a stock. It's a sector, supermarkets. ACCC findings have come out today. In fact, I do have the recommendations right here. So I'll talk about these recommendations. There's a reason why share price of Woolworths, Coles, what's the other one? Metcash are riding high today because there's less risk. It's all about risk. Market doesn't like uncertainty, and because ACCC hadn't released their findings, the market's like, well, it could be really bad. It could be really, really bad. Maybe they want to tear up all the supermarkets. When I say tear up, I mean separate them. I don't know what they will do. But anyway, so obviously the market likes these recommendations. Not sure if Woolworths does or Coles, but the market likes it. That's why Woolworths is up about 5%. The other 4 companies within the top 5 have all released something interesting today, including half-year results for Premier Investments. And then we'll have a look at some of your comments. By the way, I have recorded a standalone video, not stock of the day, but I have looked at and reacted to one of these Motley Fool articles. I didn't realize they released so many articles during the day. It's just a plethora. One of my favorite words, by the way. Plethora of articles. Just one article after another. I'm pretty sure these people who write articles, I'm pretty sure they're contractors, I have no idea. See big future for cybersecurity? Check out this ASX ETF. That's not the article I was looking at. I'm not sure I could find which article I looked at. Anyway, so standalone video on that. In fact, that video went for about 15 minutes. There you go. In fact, this is the one. Actually, I shouldn't say. Forget I just said anything there. Let it be a surprise. Okay, so let's have a look at the ASX today. And I might just refresh this because we've got 6 minutes left in trading. And because we have seen a little bit of a sell-off in the last few maybe hour, I was thinking maybe we could be seeing a little bit more red. In fact, tech's almost down by almost 1%. Let's have a look. Oh, yeah, look at this. Yeah. Tech's been really interesting today. A really nice run up at about 11 a.m. and then it pulled back and then started going high again. And then the last hour or so, we have seen it pull back a fair bit. You can see that also in the XJO and XAO, but not quite as distinct as tech. So interesting trading day today. And don't forget, day traders love volatility. So maybe day traders are loving what they're seeing today on the ASX. Best performing sectors include staples. Well, we know why there. Well, we've given it away. Woolworths, Coles, Metcash, all up significantly. And that's why staples has had a really good day. Possibly why the ASX have had a really good day as well. Possibly. I haven't really thought about that until right now. So we might have been saved by the supermarkets today. Utilities, industrials, both have had a pretty good day as well. Most of the other sectors, apart from healthcare and IT, not much happening there. But IT down 0.82%. ASX 20 up 0.4%. If we do have a look at that, more than likely the best performing company within that is going to be Woolworths. Followed, is Coles in the ASX 20? It should be. Let's have a look. It's not. Yeah, Woolworths up 5.9%, followed by Transurban, and then a few iron ore companies and a few banks as well. Worst performing company in the ASX 20 is WiseTech, REA. Oh, that makes sense. Tech. And Macquarie Group and CSL down a little bit. Fortescue down when the other two iron ore companies doing okay. Interesting. Okay, let's have a look at the top gainers today. Let's see if I've missed anything. More than likely, I've missed something. Top gainers by market, not market cap, by percentage change. We have a company called Green HY2 up 283.33%. Yes, I have missed this one. I'm assuming they must have released something interesting enough for the market to get excited. Now, the other question about this one, now up 317%. Now, the big thing about this one is where it opened, and I've just noticed it did not open up. So yesterday it closed at 0.6 cents. It opened at 0.6 cents. So it seems like all the trading has happened during the day, which means there's a possibility they did not release anything, or they released something after market had opened. So let's have a look. Yes, they have released something after market had opened. New technology agreements at 10:45 a.m. This is why I missed it. So I've mentioned this in the past that typically at about 10 a.m., I go away from my computer for the rest of trading, and then I come back to record a video. And a lot of times I completely forget to look at the announcements released after 10 a.m. And this is a good example. So what I should do before I start recording, I should have a look at the announcements. Come on, ComSec. I do get frustrated and annoyed fairly easily, and I should have a look at all the price-sensitive announcements that were released after 10 a.m. Not a lot. So the last one I remember looking at was the Cider AI Industries. I didn't have a look at this one, but I've never heard of this company before. And then that's it. Like I didn't see iCandy, financial results and audit update. I did not see Bioxyne raising $3 million in capital raise. Might put that onto my list of looking. I knew they were in a trading halt. And there is Green H2Y or HY2. What else? New Zealand Me response to speculation regarding stuff. That's like a word I would say when I can't think of the word to say. I just say stuff. So this must be some sort of website. Yeah, Stuff Limited. Potential transaction. So are they taking over? Yeah, okay. And anything else here? XREF, restructure of board appointments. Yeah, nothing much otherwise. So it's really this one from Green HY2. New technology agreements. We'll open this one up because it's interesting. Because the share price is up 300%. Okay, what I typically look for are any sort of numbers, how this is going to be financially beneficial to this company, Green HY2. Now, the reason I look for that is because you just don't know. You just don't know how this could be beneficial. So a lot of the buying up of this company shares today is just based off potential. This could be really beneficial for the company. I just don't know. So someone who's become a little bit more risk averse, like I have become over the past 10 years, particularly over the last few years, this is not the sort of announcement that would get me excited. Now, if I was trading, like day trading, even short-term trading, this would get me excited just because how the market has reacted. So if you have a look at the chart for Green H2Y, what's the ticker code again? Where is it? H2G. Now, that's the weekly chart. So let's have a look at the daily chart. In fact, the weekly chart looks pretty ugly. Interesting. This is what gets me. Not a lot of volume prior to this. And over the past few months, we have started to see a little bit of volume coming in. So that could be a sign. And then today we've seen really big volume coming in. Now, I'm just going to have a look at the 1 minute chart just to see. So yeah, it's really interesting. The share price started to rise. Yeah, they went into training halt. Yep, you just started to see it. So it starts at 9:56 a.m. So that's Brisbane time. So it will be 10:06, no, 10:56 New South Wales time. The announcement was released. There would have been a training halt for 10 minutes. And then we started seeing buying straight away. Share price up 16.7% on release of the announcement, but that's only 0.1 cents. So we didn't see a massive volume coming in. And we've just seen the share price rise all through the day. I think day traders have got hold of this, and that's why the share price is running hot today. The other thing to mention is if you do have a look at the daily chart, share price is at a long-term high, volume coming through, but the one thing missing for me is it's not the sort of announcement that I am going to react all that well to. I'm not going to say, wow, this is company-changing news. I'm not at that point with this company. Again, I don't know much about green HY2 at all. So maybe there's way more to this announcement than I'm talking about. I don't know, but for me, it's not there yet. I need to see some proof, some financial proof that these deals are beneficial to this company. But anyway, pretty good day for that company. Compumedics, that is actually in my top 5 stocks of the day. Share price up 25.5%, so very happy with that. And what else do we have? Playside Studios, looks like they've gone through a change in leadership, but I'm pretty sure this was announced a few days ago, either yesterday or the day before. So maybe this is a bit of a slow reaction from the market. Yeah, CEO transition yesterday. Share price didn't rally all that much. No, didn't rally at all. I think we can move on. And that's about it. Let's have a look at the top gainers by market cap. Yeah, there's Woolworths at the top there. We know why. Boss Energy, I'm assuming with Boss Energy up the top there, that uranium's had another really good day. I'm looking for other uranium companies. I can't see any. Maybe it was just Boss Energy. No, I was going to say, is this company uranium, but it's got lithium in its title, so no. What MetalsX? So tin. MetalsX chart had been looking good. Haven't actually had a look at it lately. So was this a buying opportunity for MetalsX? Oh, it's a nice looking chart, MetalsX. Yeah, we saw the share price dip back the last 3 trading days. It's a nice looking chart for MetalsX. I do like that chart. By the way, Aries Resources, no, nothing else here that I want to talk about. Okay, let's turn our attention to the top losers. By the way, we're in the closing auction, and the market, nice little rally in tech since last time I looked at it. Top losers, Tlou Energy. Did I see that company in the Tlou Energy? Did I see? Oh, price query. Obviously, the share price went higher yesterday for some reason. Yep, 122%. Oh, look at the price rises the last 4 days after going down a lot. Yeah, would even be interested in this one. Look at it's been up more than 10% the last 4 days after being down more than 10% the previous 3 days. This share price of this company is just all over the place. I would say that day traders are loving this one. Maybe not all of them. Some of them probably losing a lot of money. So they got a price query because the share price was up 122% yesterday on no news, and the share price has fallen today, which is understandable. Anyway, so we can move on. Otherwise, Medadvisor is now below 10 cents. That is shocking. I haven't looked at this one for a while. Yeah, this one, I still remember someone calling me out for not trading Medadvisor. We'll have a look at the 25 and 100 day, the daily chart. Yeah, someone was calling me out, I should be trading Medadvisor, which actually was not a bad call. So this was back May last year somewhere. Share price was on a beautiful uptrend, but I have a feeling they were calling me out because they thought there was a lot of potential in this company. And I thought there is a lot of potential in this company, but look what happens when things just go against you. And this is what's happening with Medadvisor right now. Share price moved into a downtrend back in August, September, and the share price has just kept on dropping after a few negative financial reports from the company. And now the share price is below 10 cents, which is shocking. I did not think it could get there. Is this an opportunity? Well, I don't know. Last time the share price was below 10 cents was never. Yeah, shocking. And this would have to be significantly oversold. I'm shocked Medadvisor share price is down that much. Market cap of the company is only 52 million now. I think there could be some. I'm going to have a closer look at Medadvisor. I'll write it down here. I'm going to write it down. Is the market overreacting? That's what I'm looking for, if the market is overreacting. Okay, let's have a look. Well, by the way, rent.com.au did release something today, but I went straight past it. Maybe because it was a capital raising. Let's have a look. Oh, yep, capital raising, so we can move on. Top losers by market cap. We have Pharmaceuticals. No, Liontown Resources. Orabanda. Why is Orabanda down? OBM. Probably for no reason at all. 20, no reason. Why is Orabanda? Didn't gold have a good day? I thought gold had a good day today. Oh no, gold had a bad day. Sorry, this could be just noise. It's still a beautiful chart, even though share price has pulled back. Now, this could be a buy the dip situation. It's not a big dip, but it could be. And go back to top losers by market cap. And anything else I want to talk about here? Findy down 10.92%. So remember they did a capital raising. Capital raising was at $4, a big discount. They also announced a pretty good change in fee structure for ATMs in India, which was going to be financial beneficial to the company. But it looks like because of that heavily discounted share price, and the very fact share price had run up a fair bit, I think this could be just profit taking. I think maybe it's an interesting pullback, and I have no interest in Findy right now. Just based off the chart. What else do we have here? Nothing much. Nothing much to talk about. Okay, so let's turn our attention to the top 5 stocks of the day, starting with, by the way, Bioxyne. Now, before we get to the top 5, I just want to have a look at Bioxyne. Share price is up. That's interesting. So they've done a capital raising. 3 million in capital raising. Now, I did not have a look at this announcement just because it was released at 10:30 a.m. I knew they were going to do a capital raising. Now, based off the share price, it mustn't have been that much of a discount. Maybe 5% discount. Let's have a look. See. Oh, this is not. So this is just a placement, it looks like. So this is just a placement. So based off this, shareholders like you and me cannot participate in this capital raising. They're getting options as well. Oh, man, I actually would participate in the capital raising just to get some options. So they're raising at a 2.2% discount to the 15-day VWAP. At 2.5 cents. So it was a little bit lower than 3 cents, which was a closing trading share price the other day. So it looks like the market likes this capital raising. Only $3 million. It's not a lot. And what are they doing with this money? Do they mention what they're doing? Yes, here looks like. The funds will be used to support expansion into European markets and the setup and certification of medicinal cannabis manufacturing facilities in UK and Czechia. Also enable Bioxyne to accelerate its growth strategy and deliver upon its stated revenue guidance of 25 million for financial year 25. I'll be honest with you, if they don't reach 25 million, in fact, they should do a revenue upgrade. And if they don't do a revenue upgrade, I will be disappointed because they've already got half of that in 1.5 years. So it's not a really ambitious revenue target. I think they should be a little bit more, well, maybe not, but maybe they're being conservative. Anyway, so with the share price up, that's nice. It's a nice day for Bioxyne. Looks like the market's liked it. Share price did get to a low of 2.7 cents. So maybe a little bit of selling on open, yeah. So a little bit of selling on open, and the market's digested the capital raising and has liked it. Okay, so now to the top 5 stocks of the day, starting with Paladin. Interesting enough, we saw Boss Energy share price up a lot. And I forgot Paladin was in my top 5, share price down 4%. And the reason is because one of their mines is being hurt by rain. Unseasonal rains impact the Langer Heinrich mine. Well, that's the problem with many mining companies. Their operations can be impacted by things they can't control, like weather. Just ask 29Metals. The company has a project north of Mount Isa, and it's just full of water. It's been full of water for like 2 years, and that's because of a massive rain event 2 years ago. Anyway, and that significantly affected that company. Just have a look at the chart for 29Metals. Anyway, so this is in Namibia. And when I picture Namibia, I just picture deserts and not much rainfall. So unseasonal heavy rains in Namibia, as a result of the weather event, access to the mine has been impacted and operations have been temporarily suspended. It's interesting the share price has not dropped even more than 4% because this is uncertainty. This is risk, uncertainty, market hates it. So that's interesting. The share price has not dropped even more. So that's a good thing. Good thing. By the way, share price was down probably about 10% at one point. Yeah, share price was down 10% at the low. And I almost guarantee you the low was near the open. So let's have a look at the chart for Paladin. PDN. By the way, the chart, it's an ugly chart. And how long that 1 minute chart? Just see trading today. Yeah, the low was 1 hour, almost 1 hour into trading. And then we saw a really good bounce. Maybe the bounce because they realized it wasn't raining in Namibia anymore. How rare is rain in Namibia? How rare is rain in Namibia? Did I spell that right? Oh my God, I spelled it right. Well, I can't spell how. Rainfall in Namibia is extremely variable. Mean rainfall is only 278 million, with a variation from 650 in the northeast to less than 50 in the southwest. And that, rainfall in the Namibia desert, or the Namib desert rainfall, is extremely scarce. So I suppose what's important when it comes to this mine is where is it located? I have no idea. In fact, Namibia rain, we can actually see if there's any news on this. Rain wreaks havoc in Namibia. There you go. Roads closed. They probably had like 1 millimeter, and oh, geez, nice little pictures here of Namibia. I always make fun of like Melbourne or Adelaide. They have flooding. They get like 10 millimeters and significant flooding, that sort of thing. I'm being hyperbolic when I'm saying 10 millimeters, but different areas, because historically they might have less rain. If they do see significant rain for them, it can cause significant flooding. But for other places like Brisbane, if Brisbane had Melbourne rain, it would be no problem at all. It's just how those different locations deal with rain events. Sort of like living in United States. I lived in upstate New York for a while, and they had a lot of snow. And it doesn't matter if they had 4 feet of snow. The snow was off the streets and off the footpaths so quick because they were so efficient getting the snow off all those sort of places. But then we went to Oklahoma, much less snow there, and snow just caused havoc. A few inches of snow, havoc. Everything just shuts down. So yeah. Anyway, so rain in Namibia. There we go. And that has affected Paladin. Coming in number 4, we have Compumedics. Maybe this should be higher because the share price up a fair bit. Come on, don't stall on me now. There we go. Share price up 25.49%. This is a company I've been following, not closely, but I've been following this company for well over 10 years. Haven't really seen this company hit any sort of, they have hit inflection points of becoming profitable and cash flow positive, but they haven't seen any momentum. So it's good to hit that inflection point, but then you need to see momentum. And this company's never reach that momentum. So if we have a look at Compumedics in FinChat, Compumedics, and we'll have a look at like revenue. So very slow, I suppose revenue has been very slowly rising, but it's slow. And if you have a look at income, I have a feeling you're going to see some years down. Yeah, so no momentum when it comes to income or profit. Revenue's been rising, but no momentum to the most important thing, which is profit. And even if you have a look at cash flow, I would say operating cash flow has probably been nothing. Yeah, it's all over the place. So that's the thing with companies that can grow their revenue. You need to see that sort of growth also translating to the bottom line, which is profit. I suppose cash flow from operations isn't the bottom line. It's actually at the top or near the top of the cash flow statement. So anyway, Compumedics is a company I've been following for a while, but I just want to see this company hit an inflection point. And on occasion, they do release an interesting announcement that can cause a share price to rally. And it looks like that's happened today with this new Meg order. So it's not Megalodon, so it's not a huge shark. I'm assuming it's not a huge shark. Meg order is, who wants to try to pronounce this word? It's, okay, we can break it down. Magnetonocephalography. 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 Okay, we'll just call it Meg from now on because you don't want to hear me saying that anymore. Successful installation at Tianjin Normal University. I wonder if there's a Tianjin Abnormal University. And a few other orders at a few more. I'm assuming these are Chinese universities. Taking total Meg sales orders to 4, representing about $20 million in revenue for this business. Does sound interesting. Maybe I'll have a closer look at this company. Oh, they have also updated their guidance. So this could be a profit upgrade, maybe a revenue profit upgrade. Updating their financial year 25 guidance and providing initial 26 guidance. Sales order taken from financial year 25 are expected to be more than 60 million in financial year 25, with booked revenues at least 55 million and EBITDA of $5 million, which is fairly low. I'd like that to be a little bit higher. And financial year 26 book revenues will be at least 70 million and EBITDA to be more than $9 million. So from 2025 to 2026, there is a little bit of momentum there. A little bit of momentum. So this could be an interesting play. Don't know anything about this, Meg. What the hell is magnetonocephalography? Tonsils. I just want to say tonsils, but look like it's looking at something in your brain. There we go. Functional neuroimaging technique for mapping brain activity by recording magnetic fields produced by electrical currents occurring naturally in the brain using very sensitive detectors. Anyway, so very interesting. And let's have a look at the chart for Compumedics. Is this the catalyst for this company becoming something more, maybe real? No, that's the wrong company. Compass Minerals. I was going to say, that does not look like chart. Or that, by the way, that chart doesn't look that bad. Right, no, in the last week or so. Compumedics, let's have a look at the weekly chart first. And you can see why since I started following this company, well, actually, there was a period between 2014 and 16 where the share price did go on a massive rally, but since then, nothing has happened. So I probably started following this company during that rally, not this rally. And since then, yeah, nothing to really pay attention to. But if we do have a look at the daily chart, even though share price is up 25%, it's not at a long-term high. It was at this level not that long ago in January. So not really the breakout I was looking for, but an interesting announcement, and it is an upgrade. And upgrades are important. And some good volume coming in. So nice volume coming in, but a nice announcement from Compumedics. Compumedics. Coming in at number 3, we have Telix Pharmaceuticals. And someone did mention in my comments to give it away. Who was it? Who said it? Ben Hutchison. Again, Ben Hutchison. Telix market seems unimpressed by FDA approval of the new drug Godzillix, or as I say, Godzilla. Slightly surprised, but Telix may be priced for good news, and sometimes these things take market a while to appreciate. I agree with that. I will buy on FDA approval of a product all the time. It isn't always successful, but a lot of times it takes a while for the market to digest that news, sometimes. So Telix Pharmaceutical share price is up a little bit. And they did get FDA approval. I like FDA approvals. This is a sort of announcement that would move me, that would make me maybe do more research in a company. So FDA approves new prostate cancer imaging agent Gozilix. I think there is a potential that the market thought this was going to happen. The market already priced it in there, so this was not surprise. So that means if they did not get FDA approved, the share price would have dropped like a rock, which could have happened. Funnily enough, I have heard a few people, experts, talk about this company saying, "Oh, I'm not the biggest fan of this company because the future of this company is too binary." And I'm like, "What? They're already selling something. It's not binary anymore." The only thing you'd say in any regards to binary outcome of this company is they're either going to grow at a good rate or really great rate or significantly grow, because they are growing at a significant rate just by selling one product. So this company is no longer has a binary outcome. And it does piss me off and peeve me off a little bit when I hear experts say that. Well, I'm just waiting for FDA approval because the outcome is binary. But for the company itself, it's not binary. It would help the company, but not binary. Anyway, so a little bit surprised, maybe not. Share price has not rallied all that much. So I think I agree with Ben that I think maybe the market is already pricing it in. Oh, wait there. I keep forgetting this company is also listed on the NASDAQ now. And when you look at the chart, there's no reason to be nervous or upset or wary. If you go back to July, August, September last year, you can see share price didn't do much over a 4-month period, and then it broke out. So what you could do with this is just have a look. So put it at high, and then when the share price went above that, you can just see, let's go back to that period. So share price was going sideways for a while. And when I say a while, I'm talking about about 4 months. And it was sort of maybe trading in a range. And when it got above this high back in July, share price kept on moving up after that. So when a bit of a uptrend, upwards movement. So that's what you could do now. But it's not really trading in a channel right now because we haven't had enough time. But there's no reason to be. Put it this way, I have not even thought about selling any of my shares in this company, unlike some other companies, which I have sold. Promedicus, thank you. Promedicus, by the way. I have taken profits. I have not sold completely, but I have taken profits. And it's just, yeah. So that's just Promedicus. It's just a valuation. And now it's Telix Pharmaceuticals coming in at number 3. Coming in number 2, we have Premier Investments. A little bit surprised the share price is up. I thought these results were weak. Well, one part of it's weak. Now, in fact, I'm going to have a look at the presentation. So I thought, what are they going to do? Because they've spun out or sold off the apparel brands part of the business, which is Just Jeans. What's the other 3? Just Jeans, JJ's. Here it is, Jackie E. I'm not sure why they've got this all there. It's no longer part of the business. I thought what they would do is have a pro forma performance, but they've still included the performance of the apparel brands that they've spun out. Anyway, so they've got the continuing, discontinued operations and continuing operations. So I suppose that's fair enough. EBIT in continuing and discontinued operations down 20.9% and profit down 34%. I was like, whoa. And in continuing operations, EBIT down 16%. And what I didn't like about this, they use profit for continuing and discontinuing operations, but they just use profit before tax. So they use a different metric, which I don't like. Maybe it was too hard for them to figure out the profit after tax for the continuing operations, which is a possibility. Maybe they didn't just know what to do with tax. Anyway, profit before tax down 12.7%. The other thing you should mention or understand about Premier Investors, they have a pretty big stake in Breville. I own Breville, and I actually have thought about this in the past. Maybe I should just buy Premier Investments because I have Breville, which I'm a big fan of. By the way, Breville's another one I have pared back my holding. So $1.33 billion market value of their Breville investment, 25.4%. Nice dividends, but I don't really care about that. Some property, and they have a fair bit of cash on hand as well. And they also talk about how much they're giving back to the shareholders in dividends. Don't care. I mean, the company could have used that dividends to grow significantly. So dividends aren't always positive. Anyway, I haven't really been following this or their divestment of that apparel brands and how much they're getting from Myers, but it seems like they no longer hold any shares in Myers. The people who own shares in Myers are now the shareholders in Premier Investments, because according to this, each Premier Investment shareholder got 7.2 Myers shares for every one Premier share. They also received some cash, like a distribution, and all that combined totaled $6.46. So that does help explain why the share price of Premier Investments has dropped a fair bit, but it has dropped by more than $6.46. So it does explain why the share price has dropped a lot, because a lot of cash and a lot of value has come out of the business through selling of apparel brands, and now shareholders of Premier Investments have shares in what's it called, Myer, and they also got a pretty big payout distribution, we'll call it. Anyway, so it's interesting. And the thing I did learn is Premier Investments no longer own any shares in Myer. So they did mention that somewhere. I forget where, but they did mention that somewhere. Interesting enough, what I was interested in was how Peter Alexander and Smiggle were performed. There was a nice little comment here from Just James Jean Dean. Yeah, talking about Smiggle, how Smiggle is floundering, maybe that's the word, or the fad might be over 43 fewer stores compared to financial year 19, and sales have decreased over the last 5 years. So I was really interested to see how the two different segments or divisions are performing. And I have heard that Peter Alexander is now the star of this company. And I think we do have proof. So Just James Dean provided us with some information and information today just on sales. Peter Alexander sales up 6.6%. Smiggle sales down 14.5%. So it does look like Smiggle is struggling. They do talk about, you can look at all different how apparel brands performed, not that good, which is not surprising. Yeah, Peter Alexander's performing really good. Nice growth in sales over the last 6 years, nice growth. So it looks like Peter Alexander might be the star of Premier Investments, opening up new stores, including New Zealand. Yep. So they're really focusing on Peter Alexander first, which is another sign they would consider Peter Alexander to be the star of this company right now. And then finally, they go to Smiggle, and they do mention somewhere in here that it looks like cost of living pressures are affecting Smiggle. So consumer continue to be particularly, or the Smiggle, so they must call it the Smiggle. So they call the store the Smiggle. Smiggle consumer, the Smiggle consumer, sorry, I completely missed that. The Smiggle consumer continued to be particularly exposed to increased cost of living pressures in all global markets. So I thought the Smiggle consumer was kids. So obviously they need money from mum and dad, but it looks like mum and dad said, nah, sorry, you just get the leftovers from your older sister or your older brother, if brothers go there. Anyway, so it looks like that's getting hand-me-downs now, and looks like the cost of living pressures are affecting the kids. Won't someone think of the kids? So mum and dad will rather own new bedwear, than the kids having new backpacks and stuff. Anyway, so let's have a look at the chart. Well, we've already had a look at the chart. We don't really need to have a look at the chart, I think, for Premier Investments. Nice little reaction today. Interesting one-day candlestick, by the way. Let's have a look at the 1 minute chart. Looks like there was a bit of volatility today. Oh, yeah. What? Wow. I did not expect this. Share price opened up probably about 7% higher, 6% higher, and then within the next 4 minutes, it dropped all the way down. So violent reaction in the first 10 minutes. So a lot of selling coming in, and then we saw a lot of buying coming in halfway through the day before the share price leveled off. So very interesting trading when it comes to Premier Investments today. Okay, stock of the day is, well, stocks on the day. Woolworths, up 6.3%. Coles, I'm saying 5%, maybe. 4.85%. And Metcash, probably 3%. 3.57%. The reason I would have thought Woolworths would have reacted much better is just because of the chart. If you have a look at chart of Woolworths compared to Coles, it's night and day difference. So I thought there was more pessimism already priced into Woolworths, and it seems like the market has rewarded. I wouldn't say rewarded Woolworths, but the market has realised its mistake, maybe. Anyway, so the recommendations from the ACCC, here it is. ACCC recommends supermarket reforms to provide better outcomes for consumers and suppliers. Now, I'll be honest with you, I go to Woolworths every single day at between about 7 and 9 a.m. in the morning. Fewer people there at that time. I don't like people. Well, I don't like shopping with a lot of other people. I hate going to supermarkets on Saturdays and Sundays. Why do people go shopping on Sundays? I don't understand that. My only complaint about Woolworths is they don't put any hot cross buns out before like 10 a.m. Oh, it's so annoying. I want to buy some hot cross buns that have none out. You can see them being baked in the back. Have them out at 7 a.m. when you open. My one recommendation to Woolworths is that. So I wish ACCC would have recommended that to Woolworths, but I don't think they would have. Anyway, so here are their 20 recommendations. It's really interesting. I went through some of these and I was like, I'm pretty sure they do that already. For instance, there was one, supermarkets should be required to publish pricing information. I get pricing information from supermarkets all the time. I just go to the website just to see what's on special, and I see that all the time. Anyway, government should adopt measures to address planning and zoning issues. That's one that is a complaint when it comes to the supermarkets. Supermarkets tend to hoard land that would be really good for supermarkets or competitors. And that was the reason why that German supermarket chain decided not to come to Australia, because Coles and Woolworths hoarded land. And I don't think they'll do anything with that land. Anyway, we support the Australian government's proposal to consult in relation to proposed changes to... Oh, no, that's boring. Oh, supermarkets should be required to publish notifications when package size changes occur in a manner adverse to consumers. So I'm pretty sure that refers to shrinkflation, which I absolutely abhor. Absolutely hate that. They sell the same product at the same price, but it might go down 10% in size. I think that's just terrible what they do. It's all, well, I suppose that's not the supermarket's fault. It's the manufacturer's fault. So sorry, Woolworths and Coles, but I do think it should be notified to people. Okay. Coles and Woolworths loyalty program practices should be reviewed in 3 years. Don't know why. Harmonisation of accreditation and auditing requirements. Aldi, Coles and Woolworths should be required to provide fresh produce suppliers with detailed information about their supply forecasts. Greater transparency about supermarkets' wholesale fresh produce prices. Greater transparency for growers who sell fresh produce through intermediaries. And suppliers should be allowed to apply their own branding to fresh produce. Coles and Woolworths should be more transparent about how supplier funding contributions to their in-house retail media services use. Anyway, so I'm not sure this is going to cause significant changes, to be honest with you. I have no idea. And I'm pretty sure Woolworths, let's see if Coles responded. No. I'm pretty sure Woolworths did respond to this. Let's see what they say. Yeah, it was not market price sensitive. Let's see what they say. They probably just said this is going to be beneficial for us. Let's see what they said. So they acknowledge that this inquiry file report will carefully consider its finding and recommendations. And they've, Woolworths have noted that ACCC has included many recommendations that the group has already taken action on to improve the experience and transparency for customers and suppliers. Increase value to customers through lower prices and deeper promotions. Yep, okay. Anyway, So that's why Woolworths is up. So let's have a little chart for Woolworths and Coles and I suppose Metcash. So Woolworths chart. Oh, that's the 1 minute chart. I can see it. Share price just rallied on open. Nice rally on open. And that's the chart. I'll be honest with you, even though the share price has rallied a fair bit today, not necessarily end in the trend. However, a very positive day. So I have mentioned in the past that when you see a solid red candlestick, that can be a trend killer. And the same can be true for a solid green candlestick. That can be also a trend killer. So the downtrending wars might have come to an end. I'm just going to say might have come to an end right now. I personally would not be buying Woolworths. I don't think there's any value in this sort of company that I don't care it's defensive. I don't care. Company has a PE ratio of 21.15. The growth in this company is going to be like 2 or 3% per year. Dividend yield is only 3.41%. Why? I don't care it's defensive. I want growth. And Coles Group, you can see the difference in the charts of these two companies. So Coles Group was in a beautiful uptrend. Maybe not beautiful, but definitely an uptrend. And we have seen a little bit of a pullback. PE ratio is 22.5, which is also ridiculous. Dividend yield 3.74%. I have no interest in any of these companies. Maybe Metcash. I suppose Metcash chart does not look good. Yeah, this one's ugly as well. PE ratio is 12.8. Dividend yield 5.54. If I had a choice between the three, I'd probably choose Metcash, but I don't like any of them. Okay, so is that it? Should I look at one of your comments? Just one. Just one. Let's have a look at the most recent. What I'll do is I'll just refresh this. And we'll have a look at AHC 2024 AU. Hi, Kneppy. Thank you so much for the amazing videos every day. Just wondering what your thoughts. What's your thought for EIQ, which is EchoIQ? Looks like we had a breakout yesterday. I don't know anything about the company itself. EchoIQ. Is this about intelligence? The amount of intelligence of people that are in a canyon. Because you hear echo in a canyon, and maybe it's that sort of thing. I have no idea. I couldn't even tell you if someone pointed a gun at me in an elevator and said, "Give me an elevator pitch for EchoIQ," I could not say one single word. A lot of times when I want to do a little bit of research on a company, or when I get this sort of question, the first thing I do is have a look at an about section. So, and the first thing I noticed is they have no about section in that announcement. Something else I might do is have a look at their website. Now, if a company doesn't have a website, I am concerned. That is a major concern. Interesting to have a heart here. So obviously EchoIQ has something to do with hearts. They mentioned clinicians and research. They also always should have an about section here. Here it is. An about section. What's their mission? Use the AI-powered technology in EchoSolve to enhance the diagnosis of structural heart disease. So they have some sort of device. Is this a device that helps heart disease? I don't know exactly sure what it is. Features. So is this like a SaaS company? Is it software, or is it sort of like a device? Looks like it's an app or something. Okay, so something to do with heart disease, AI platform, could be software, maybe it's a device. The next thing I always have a look at is just the most recent, say, Appendix 4C. I always prefer to look at Appendix 4Cs for companies like this because they release those every 3 months. And we can still see cash flow, 6-month cash flow in the most recent Appendix 4C. And I'll be honest with you, I tend to focus more on the cash flow statements of these type of companies than profit and loss. And what's the other one? Balance sheet. So at this point in time, it's more of a story stock. Only receipts of $200,000 and operating cash flow positive. So still a little bit of a story stock for me. What else can we see? What's the markup of the company? I reckon it's pretty high. 200 million? 176.56 million. By the way, I was just guessing. No insight of this company when it comes to markup. And the other one was the chart. So EIQ. So yeah, share price of this company is in an uptrend, and it's playing ball. So even though we've seen weakness in the market, the share price of this company has gone up. Share price has pulled back today, 7.7%, but it did reach a long-term high yesterday, maybe even an all-time high yesterday. So even though share price has pulled back today, it's not a negative sign. So I don't have anything negative to say about this chart at all. Share price going sideways for a fair while. This is the weekly chart. Share price went sideways for about 3 years, and then it broke out back in September last year. It's a beautiful breakout. Nothing else to say. Even though the company is sort of more of a story stock, I have nothing negative to say about this chart at all. The one thing, I was having a quick look at volume. The one thing I'd like to see is a little bit higher volume coming in. We've seen subtle increase in volume since February, but I'd like to see some higher volume coming in. We saw a spike in volume back in October just after it broke out, but then they must have released something really big on the 9th of October, share price up 29.2%. Then the share price pulled all the way back to the breakout level. That's interesting enough. So that was the time to buy. The share price pulled back to about 22 cents. Anyway, so I do like the chart. Okay, so that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.